Hello and welcome to our short little course about trading routines, how to create a trading process, and how to structure your day as a trader better. And this is very different from the rest what you see here on Tradeciety, where we mostly talk about technical analysis, risk management, money management. And this time we will take a look at a very different area of trading, but I think that it will make a big difference in anyone's life as a trader if you can just apply a few of the principles that I will share with you over the next few videos. So I always like to start with this graphic, and it shows the performance of retail traders, Forex, stocks, options and futures, and the data has been gathered by analyzing brokerage data. And you can see very nicely this pyramid where at the bottom 40% of everybody who starts trading drops out after only 1 month. Then when we go higher, you see that 80% quit within the first 2 years, which is a very high ratio. And then after 5 years, only 7% remain, which is an astonishing development and an astonishing dropout rate. And what is even more interesting is that only 1% of all traders can profit net of fees. And this is very different from what you can always read about 95% of all the traders fail when they trade. And the number 95% is actually much higher. So this study or this data set suggests that this number is more in the 99% ratio. At the same time, I don't think that this is true because trading is especially or particularly hard, but because that traders or the people who go into trading, they have a wrong mindset, have wrong expectations, and overall a very bad approach to trading, which for the most part can be fixed quite easily, as we will see. So let's take a look at the problems traders have, and they are the problems that are not limited to chart reading or how they determine their entries, which indicators or time frames to use, which markets they trade, but they are all mentally and structural processes and problems. So the first one is that people are not able to quantify their mistakes, and so whenever they make a mistake, they don't really know what the problem is, or they quickly forget about it. They come up with excuses, and they approach their trading from a perspective of guessing, where they really don't have a solid approach, but they are just stumbling around in the markets without having any real approach to the markets. This then leads to repeating the same mistakes hundreds or dozens of times. Many traders will probably know that, especially if you're a little bit experienced and have been trading for a few weeks or months. It is rare that you see traders make many different types of mistakes. There are not 20 or 30 mistakes that traders make, but usually it can be boiled down to just a handful, 3, 4, 5 mistakes that cost traders a lot of money, and they will repeat that over and over again. And without having a routine, a process and a structure in place, it is very hard to overcome this pattern. Because if you don't have a structure, you are just stumbling around, you're moving or you're stumbling from one trade to the next. You don't really know what you're looking for. You miss a lot of trades, you flip randomly through time frames, hunting signals, you waste a lot of screen time, you chase trades, you act based on FOMO, which is the fear of missing out, and those are all very common problems. And without a structure, most traders are doomed to repeat that cycle over and over again without seeing any results. And so if you don't know what works and when it works, and you don't know what doesn't work, then you are doomed to keep on system hopping or method hunting, which means that you go from one system to the next over and over again. After a few trades, many traders will get easily discouraged. They believe that their trading method is not working anymore, it is not a good one, so they start looking for another method, a different indicator, a different setting or whatever. They completely change their whole trading around, hoping that it is just a matter of finding the right trading method, but this never works. And in trading, like in life or business and sports in general, you always start at the bottom as a beginner without experience or skills, and that is totally normal, but you have to understand that this is something that is not limited to business or sports or anything. If you're in university or college, you start at the bottom without having the skills necessary, but nobody would expect that you are an expert right from the start. So over time you will develop your expertise, you will become better, you will learn new things, and slowly you will be able to make progress over the next few months, weeks and years. And that is the normal progression, but in trading we always forget that. We think trading seems so simple, we just need to find the right method. and then we'll be able to make money. But this is not how trading works. You have to take a system, you have to dedicate yourself, your energy and your time to it. You have to really analyze, when is the method working, when isn't it working, when am I screwing up as a trader, or maybe I am the weakest link in my trading approach and it's not the method. But without having a structure and a review process in place, it is very hard to understand that and get a better feeling for what works and how to improve as a trader. And so instead of focusing on the money and the results, your trading performance, your P&L, it is very important, especially if you're still struggling, that you focus on the process instead, which means that not all winning trades are good, not all losing trades are necessarily bad. You have to look beyond that and you have to look at how well you execute your trades. Do you respect your rules? Do you break your rules? Do you follow your trading plan? Do you second guess? Do you just jump in the market without having any signals or criteria from your trading system? So you have to move away from this results-oriented mindset where you just look at the pure outcome of the trade, and you have to look deeper at how you execute your trades and how you manage your trades. This is also something where traders will move away from the short-term mindset where they just look at one trade and they just stress out about the most recent result. And you have to move towards a long-term mindset, and you have to understand that even the best trades, the best signals, setups, they can fail and they will fail over time, over and over again, but it's not a big problem as long as you're dedicated to improving your process, and as long as you stick to the plan, as long as you stick to your rules and execute your trades as perfectly as possible, the money will usually follow. And so move away from the results-oriented mindset and get into the process-oriented mindset, which is very important, and a routine and a journaling practice or record keeping will help you with that. So the solution, as I said, is a process and a routine, and what it does for you is it helps you become aware of your mistakes and about your trading approach in general. Most traders don't really understand that they are repeating the same mistakes over and over again, and having a process and a routine in place will help you avoid that or help you improve your overall approach. And then over time, after you have entered your trades in your trading journal, you are better at record keeping, you realize or you see a common pattern in your trading that you keep repeating the same mistakes over and over again, then eventually when you're about to enter a trade and pull the trigger, then you review the setup. You think, okay, is this really a setup or am I just making the same mistake over and over again? Is this something that will cost me money? And we have seen it over and over again that people often then recognize the mistake before they enter the trade, and it helps them then to proactively improve their trading when they can avoid those trades before they happen. A structure and a process will help you also save time in your overall trading. So especially if you're starting out, you still have your regular day job, you have hobbies, families, friends, then your trading time is probably very limited. So you have to make sure that you have a solid process and a structure in place. And I will show you exactly how to create a routine over the next few videos that will save you time and become a more productive and efficient trader. And this all leads to trading with confidence, where you believe in your system, you understand your method very well, you understand yourself as a trader very well, and over time, trading with confidence will help you avoid many of the common mistakes. You will not second guess your trade signals, and you will be able to adhere to your rules and follow your plans more effectively. So here are 3 very practical tips that you can use right away, and we will get into each one later in another video step by step, where I will then show you how to create a process and a routine for your own trading. So first of all, journaling trades and having a trading journal is probably the number 1 tip that any trader can have. It doesn't matter which trading book, website or blog you read. Every trader knows that a trading journal is a must-have tool, and many traders don't have that, which is a very big problem, because without a journal, without being able to record your trades, there is no learning process in trading. You are doomed to repeat your mistakes over and over again. Just ask yourself right now, do you remember your last 2, 5 or even 10 trades? And if the answer is no, then you probably don't have a real good approach to trading. You are just stumbling around, and it is very hard to make progress and improve as a trader if you don't have a journal. Here's a very practical tip that I got from the book Pitbull Trader from Martin Schwartz, and what astonished me is that even after decades of trading, he made lots of money. He still uses a physical checklist before he enters his trade, and I think that is very important. I adopted it to my own trading, and if you enroll in our Pro Tradeciety package, there you will also get my exact checklist that I go through before each trade with every signal and every criteria, and this helps me improve the quality of my trading significantly. And so following a structured approach and a routine will help you get consistent results, and most traders approach this from the other side, from the other end, where they always try to get consistent results first and then try to be consistent with their actions. So they always say, okay, I just need a better method that is giving me results, that's giving me positive results, it allows me to make profits, and then I will be able to stick to it. But it is the complete opposite way how you should approach it. First, you have to be consistent with your approach, with your behavior, and with your method, and then the consistent results will follow. Of course, at the beginning, you probably won't make a lot of money, but that is okay as long as you follow a consistent approach. It is much easier to review your trading data, because if you are all over the place, the data that you will get is totally meaningless. So it is very hard to find patterns and make improvements. So always start with a consistent approach first, and then the results will follow. So let's take a look at why we do it, how we do it, and the tools and things that you will need as a trader to create a structure and a routine. And the first one is a trading plan and a checklist. And I'm a big fan of that. If you've been following me on Tradeciety.com, you will know every Sunday I load up my trading plans and my watch list for the coming week. And this is what I do in my personal trading. I map out every trade on a Sunday when the market is closed. I take a few hours to get ready for the week, and then during the week I use a checklist, which helps me to get to know my method very intimately. I stay on top of things, I don't miss many things, and I'm aware of things when they change in the markets, or when I am screwing up, I can correct that very easily with such an approach. Then before we start our trading day, we do a quick pre-trading check. This is something that we will cover in the next video. I'll show you exactly how to start your day as a trader correctly, what to look for, and how to prepare yourself. Then after you've done your trading, you go back to your trading journal, you enter your trades, you perform an objective review. Often that will hurt, especially in the beginning, if you see that you are repeating the same mistakes over and over again. But it is a necessary step, and it is good, because the more it hurts, often the better the lessons will sink in, and the more likely then we can avoid such negative behavior. And at the same time, we can do a quick post-session check. I will also show you that, what to look for once you are done with your trading, how to analyze your trades, and how to get ready for the next day. And on the weekend, you can then take a little bit more time, go over your recent trades, catch your screenshots, review your screenshots, review your trading journal, and so make a very big improvement. And what then happens is that you move from the right area and from the right diagram, which is how most people approach their trading. I call that the hit or miss approach, where people try something, then it fails, they lose a lot of trades or they lose a lot of money, then they try something new, they see it doesn't work, they look for a different method, it doesn't work, they look for a different method, and eventually they blow up or they quit, and they never see any consistent results, let alone any profits in trading. But if you are following a structured routine, of a structured approach, you can move on to the left side, which is evidence-based practice, which starts where you try something, you subscribe to a method, you start following a consistent approach, then you fail. This is the first necessary step. Nobody is perfect when we are starting out, that is totally normal. And then you analyze, why didn't things work, what did I do wrong? And so you can make adjustments very targetedly, and over time you can improve that. You don't make radical changes at once, you just make one tweak at a time, you see how it impacts your performance, and then you can analyze and go on from there. And that is the first quick introduction into why it is necessary to have a process, why to think beyond just entries and indicators. And if you are an experienced trader, or at least you have been trading for a few weeks and months, not seeing the results that you're looking for, I'm very positive that the next few videos can help you a lot and help you understand yourself as a trader better, and also to create a better approach for your overall trading. I hope you enjoyed the video, and see you in the next one.